All right. Hi, everyone. Thanks for joining us on our market talk today. My name's Rachel. I'm here with the Prevail Group with Amy and Kevin Sally. We have Julie here with us from A Buyer's Choice Home Inspection, Coe with Heritage Title, and Mike with Blue Leaf Lending. Amy, any other introductions at the moment?
Yeah, sure. Introduce us? Is that what you just said?
Yeah.
I'm like, what did you just say? No, we are basically we're a real estate, residential real estate company. We're the Prevail Group, and Kevin is the listing agent on the team, and I'm the lead buyer's agent on the team. And we just felt it was really important there's just a lot going on. There's a lot of questions, and we wanted to make sure we brought in some of the industry professionals that are actually on the ground, seeing what's happening every single day. And I'm really glad that Coe was able to join us. There's a lot of title questions. And so, yeah, so thanks everyone for joining us who are here today. And I'll just pass it on to whoever else would like to speak. Is it Julie? Julie, would you like to say something?
Sure. Thank you for having me. First of all, Rachel, I appreciate the invitation. Coe, I know people have been trying to connect us for a long time, so it's wonderful to see you. My dad has had bought the home inspection franchise 11 years ago, and 5 years ago, he brought me on to basically do everything he didn't want to do. So my job is to take content, to not take content, to give you content, to take headaches off of your plate, whether you are in lending, title, or real estate. Most home inspectors, I don't think, do that. And so when we're going to record videos or do anything, we go straight to the source and say, hey, how can we help you? What do you need? So that's what we're all about. We are a team of 3. It is myself, my father, David Johnson, and then another inspector, Peter Stanton. And we serve everywhere from Greeley to Pueblo, the Front Range to Brighton. I don't know, way out far, which I don't know where that is. So that's all about us.
Awesome.
Great, thanks.
Thank you. And Mike, would you like to introduce yourself?
Sure. Mike Cohen with Blue Leaf Lending, part of a Midwest community bank out of Chicago. We lend in all 50 states, residential and commercial, so refinance, purchase, any and all products, so first-time home buyer to high net worth, super jumbo, kind of everything in between. Predominance of everything taking place right now, obviously mostly in that conforming and kind of jumbo market. So we can handle it all from start to finish, and I just really like to work with folks on a one-on-one basis. Everybody's an individual. There's very few kind of broad brush strokes at this point in my world, so each person still comes to the table with who they are and what they bring. So we just work through that individually and just try and choose the best possible options.
Great. Awesome. Thanks, Mike. I know we're going to have a lot of questions for you later, too.
Yeah.
For sure. Cool. Maggie, since you're in home warranty, would you like to just introduce yourself? You're one of the professionals, too. Just love to see, just hear who you are and what you do.
Sure, yes. Maggie Turner, National Home Guaranteed Home Warranty. I do work from Fort Collins. I really have the whole state except for the mountain towns. We don't go up that far, too far, but Colorado Springs up to Fort Collins. Mike, for you, we do work with lenders all the time. If you ever have any excess money on the table, we can put a home warranty on it. Say you have $600 and you want to put a $400 warranty on it. We can send that extra $200 back to the buyer. Nice. Or we can bank it for them for a renewal, for a claim, whatever way they want. Or we've done, and we do up to 3-year home warranty. So there's lots of ways to, I think last month I had one up to $3,000, believe it or not. So yeah, it's crazy. Yeah, that was pretty crazy. But so we took that. So, and then Kevin, for you, we have the free listing coverage with no obligation whatsoever. Right now, and I always say put the top of the line coverage on a listing which right now is our $500 special. It's a $750 value. It adds a pre-existing unknown, which is always good to have. Otherwise, the seller has a 20-day wait period. And that's also good for the buyer, because they get an extra garage door opener, they get an extra water heater, they get that pre-existing, and then we throw in $45. They can use that $45 towards a claim or towards our rekey service of $70. So if they use it for the rekey, then they're only paying $25 to get their whole home rekeyed, which is fabulous.
Yeah, that's great. Okay.
Yeah,
Thanks.
Thanks,
Yeah.
Maggie.
you're welcome.
And Chloe, would you like to talk?
Hey there. Okay, so I'm with Heritage Title Company. Thank you to Kevin, Amy, and Rachel for the invite. Appreciate that. We handle title insurance. So bottom line is safeguard typically the largest financial transaction in life, which is your purchase of your home. We handle residential, commercial,
Oh, we're losing Cody a little bit.
and boy, things are busy.
Yeah.
Yeah, I bet they are for sure.
Yeah, it looks like we're losing you a little bit, Cody, so you're kind of in and out. But we heard
Okay.
where you are, so, and a lot of stuff in between.
Yeah.
Right now, you're kind of frozen in space.
Yeah.
Okay. I promise I'm here live.
Okay.
Awesome.
All right.
All right. Well, there is a lot going on, and I know that people have a lot of questions, and it changes all the time, every day. And really having you guys here to talk to us a little bit like what you guys are experiencing, and what, like for us, it was changing all the time. we were like, okay, now we can do this, now we can't do that, now we can do this, now we can't do that. So now it's the safer at home. And I think what I'd like to just see is like what has changed now that we are into this, well, we will be into the safer at home stage on the 27th, and how that's going to affect, how we do business. And gosh,
Yeah,
there's just so many people we could talk
Yeah,
to.
let's just talk a little bit about some of the industry changes in each of your professions, kind of what you've been seeing over the past month. And then obviously from the 27th on, if you see any of those changing, if so, how, if not, what are the kind of the short-term, the long-term effects of what we're seeing? So actually, I'd like to start with you, Mike, if you don't mind. I'm kind of curious about the lending side as well. I know a lot of buyers out there are. So just kind of, if you could just tell us a little bit about the changes. I know Jumbo and FHA have had changes. VA, maybe VA, just kind of what your experience and what you guys see moving forward.
Yeah, I think probably on the biggest thing is risk. So literally, about 30 minutes ago, we just got a notification. I don't want to start with the negative, but this is part of what it is. So on refinances, Wells Fargo just suspended all cash out refinances. So as of end of day tomorrow, you can't do a cash out refinance. And so what's behind that is really the liquidity and the risk, and it's continuing to increase. So risk factor right now, all of this is really related to forbearance and what is starting to be asked for by borrowers. And so what we're running into a problem with in the lending world is somebody on the refinance side, somebody does a refinance and then within the first 30 days requests forbearance, right? So effectively that becomes a non-performing loan. And while earlier today, Fannie, Freddie, the agencies have indicated they're going to actually buy those forbearance loans, it still puts a huge burden on an end lender. So as an example, that happened 30 minutes ago. Probably isn't going to make the news tonight, but you guys literally are finding it out. And if Wells Fargo is doing it, right, everybody else is going to be right behind them. So, probably by end of business tomorrow, you're going to see cash out refinances effectively go away for a period of time, right? It's suspended. It's not, it's not like they're getting rid of them altogether, but they're going to suspend it until things get a little better. On the other side, holy cow, it's just fantastic. I mean, if you're not taking cash out anymore, but doing a rate and term, it's great. I was just, rates today, 3 1/8, right? We're 0.125, right? We're an eighth away from the best rates in the history of ever, right? EVER. I quoted somebody today, they were actually able to get a 30-year fixed buy down for 0.5 point to 2.875, right? So, I mean, it's an amazing time to be able to refinance. The thing that I am seeing that I think can work really well, if, just as a little tip, anybody that that's kind of in that mode of like, oh my gosh, it's really, really tight, a refinance can actually do about the same thing as like the forbearance, right? Because you could do a refinance, close at the beginning of a month, you don't make a payment in that month. Then the second month, you don't have a payment, and you got 15 days into the third month. So you really get 2.5 months, and you could really go all the way to the third month, make your payment right at the end. So refinance can actually be a nice little tool, even though it's not, there's different ways to go about it, but it can be a really good tool at this point.
That's a great tip.
Yeah, that's a really good tip.
Yeah, I was thinking about it yesterday. I was like, man, I mean, it's not what you call up to refi for, but it could be a really good way to make it, to give a little bit of a cushion at this time, plus amazing rates, right? So almost everybody can benefit at 3 1/4, 3 1/8%. So
yeah.
All right, and then on the purchase side, I would just say the things that that are great. Has everybody seen like any of those videos where you see like a Florida python eating an alligator? Okay, that's what it's like in our world right now. I mean, 45 to 60 days ago, a huge refinance wave came in when the rates dropped. So as I say, the pig is moving through the snake, or the alligator is moving through the snake right now. But we're right at the end, we're about a week away from the end of that big push. So now what's happening is a lot of the lenders are, we've got room, we've got capacity, and everybody is kind of geared up. Appraisers have got time now. They're taking appraisals like that, and they're out, and we're getting appraisals back in 3 to 7 days. So on a purchase side, it's still very realistic to meet people's needs. We're seeing sellers want to get out quick, right? Like, hey, we want to, we have to get out. We had a new build, and so we're able to act pretty quickly. Example, took an app on March 28th, and the buyers closed on Monday. So I mean, from start to finish, 22 days from app to close on a purchase, and so it's going really well.
Okay.
That's great.
So FHA credit scores are going up. VA, kind of the same thing. They haven't moved them up, but the risk factor is there. And then liquidity in the market, that's probably the final thing I would say. Money, all of the money that we all borrow, it's kind of drying up, and especially in the kind of the jumbo and the niche market. There's going to be a local lender that I think I'll reserve because they're still a publicly traded company, but we got some really interesting emails and that here in the last day or two with a jumbo lender that is a fantastic lender. I just think they're going to go away soon. That the niche market, the self-employed market in the jumbo end is just changing dramatically and quickly. So buyers in that end are going to have challenges, and especially self-employed. The risk factor is going up. The liquidity, meaning the money that exists for that, is drying up. It's nobody wants to risk it at this point in time. So that's going to be challenging. But the flip side is, man, conventional, 510 on a conventional loan. You can get up to 560, right, on kind of that agency jumbo hybrid. So think about it, $700,000 home with 20% down, you're still in conforming conventional, and they love it. And oh my gosh, when the credit score is higher, 3 3/8 on a $560,000 purchase, right? Loan amount at 560. So again, where can you borrow 560 grand at 3.5, right? I mean, it's
incredible.
So really, really good time on that front. And I'm trying to think, how about this? Did I miss anything? Is there any specific question or?
I have a question for you.
We got one question for you.
All right, fire away.
I'm at 4%. I'm at 12 years.
In or remaining?
Remaining.
Okay.
I don't need any money out.
Good.
I know, because I can't get it. So, and my credit score is really good. So do you think I should refinance? And can I do it and stay at 12?
Yeah, you could, but with that few years left, I would just tell you, pay it off at a rate that you think is great. I mean, you could refinance, but the cost of doing that, and the cost of doing it and what you would save, the amount of interest wouldn't be enough. So I would just tell you, I could run some scenarios for you that would help you either pay it off sooner or just continue where you are. You're not going to gain that much by, even if you dropped 3/4 of a point in rate with what's remaining.
Okay.
I don't know that it will work, but I could run some numbers for you and you could make that decision.
Yeah, so maybe just make some extra payments to get it down quicker.
And I'm just telling you, stockpile cash. So everybody stockpile your cash. Because what you can do, the other thing you can do is virtually all lenders now have an option called recast, RECAST, right? So you don't have to refinance. So like in your case, you could make a one-time lump sum payment. So think most of them are at like $5,000 or up. So you can make a one-time lump sum payment, and then they'll re-amortize your loan based upon the new principal balance. So that's another way to potentially save some money if budgeting is an issue. Or the other way, stockpile your cash, invest in something that's that is safe. I'm just telling you, oil, right, starting to shoot back up. As soon as people start getting out of their houses, that means planes are going to start firing up again, and they need oil. And plane stocks are are going to be fantastic in another month or two, right? So I'd say take that money. That's part of the reason they're cutting off all the cash out refinances as well, because everybody's like, hey, I'll pull out all this money and go and invest it, right? So, and they just don't want to run on mortgage money. But if you can, you go and invest in some of those. Now you can make money on that money, where you're borrowing at 4%, right? Borrowing at 4, go and make 8, 6, 8. That's institutional money. Heck, wait till these plane stocks start changing. Go look at Delta and United. They're at all-time lows, and in the last year they were $90, $95. They're at 20. I mean,
wow.
Trust me, those planes are going to start flying again at some point, and the profitability is going to be there. So take that, invest it, leave it out of your house. If you're borrowed at 4, that's still cheap.
Yeah. Okay. Thank you.
Well, great tips, Mike. Thank you. We appreciate it.
You got it.
Coey, I would love to hear from you next, because this is our second one we've done, and the first one we unfortunately couldn't get you on at the time. But I'm just really curious to see what the title industry, what you guys are experiencing, changes you've had to make, anything that you think is going to affect us long term, kind of short term. I'd love to hear your take on all that.
You bet. Okay.
Oh.
Mm-hmm.
I can hear you. Uh-oh.
Can you guys hear me?
Kelly's frozen.
Sorry, guys.
That's
It's
okay.
okay.
I can hear you now, maybe.
Can you hear me now?
Yes.
I'm sorry. Okay, am I coming through?
Yes.
Okay, I'm just gonna.
Well,
Uh-oh.
We lost you again, Chloe. Are you on your
It works.
computer?
So the title is just. I am. Yeah.
Do you
I think
want to, Chloe, you're
I'm
still
gonna try my phone.
Do you want to join from your phone, use the audio from your phone and mute your computer? You're freezing.
there you are.
Oh, there she is.
You're down there now.
Are you
Okay.
back?
All right, let me turn this off. Now.
There we
There
go.
we go. We gotcha.
Okay, sorry. I don't know why my internet's been giving me some trouble lately.
It's okay.
That must be the quarantine. Okay, so from the title industry, I will tell you it's been quite a wild ride. Obviously, we went on quarantine and they had us on the safe at home measures about mid-March. So we had to reduce our in-office staff by 50%. That was one of the reasons for us to continue conducting business. While we are considered essential, we've had a lot of changes around the closing process. We are still closing like crazy. As Mike and all of you know, our interest rates are uber low. Our refinance transactions have been sky high. Residential was kicking along and we're still seeing residential transactions in the pipeline, but they're starting to slow a little bit. I think now, as of Monday, April 27th, with you realtors being allowed to do in-home showings, we're going to start seeing, yeah, we're all doing a dance.
Yes.
We're going to start seeing that transactions kick in, but people are doing business. A lot of what's happening right now is mindset. It's setting expectations. From a closing standpoint, we are still conducting business, not as usual, but consistently. So we are providing curbside closings. We do not have buyers and sellers in the same room. We do still have some buyer parties or seller parties coming into the office on appointment only. We are still, and this goes through Monday, and I'm going to be sending out our requirements or guidelines that will start Monday, but we still have to maintain a 50% capacity as far as our employees. We are still maintaining a priority of safety and wellness for all of our clients, your homeowners, and our employees. So what that looks like, curbside closings will continue. Our closers are wearing masks and gloves. The clients are wanting to close in the office. We are setting up appointments for a seller party to come in. We are still asking for both lenders as well as realtors to pop in, not physically with the closing, but via FaceTime, Skype, telephone, because again, we don't want to increase the risk of COVID spreading. That's the bottom line. The way we can do that is by maintaining these measures of safety. So that's going to continue, even though you guys are going to start showing homes. The closing process, while we've been under quarantine, will remain the same. So we've got the curbside closings, in-office closings with appointments, no realtors, no lenders. And then we are asking for to wire their earnest money. If they don't have that ability or capacity, then we're asking them to call and make an appointment to bring that to an office, because our offices are locked up. People cannot come and go as they please. And that's to maintain the health and wellness of everybody involved. So as far as the market goes, as I said, refinances very strong. Residents started to see the taper. Now keep in mind that we are typically 3 to 4 weeks behind you guys. So we're just now starting to see the slow, but I can tell you from the many realtors that I've spoken to during this time, pretty much everyone I have spoken to has sellers and buyers just waiting for these measures to lift, so that they feel comfortable and confident forward in a transaction. I do think that employment is definitely going to be a factor, obviously, with qualifying for a loan, being able to buy a home, having the confidence to enter into a buyer transaction. But we've got a lot of sellers that are ready to rock and roll.
Good.
Good to hear.
Yeah.
That kind of aligns with what we're seeing, Coey, and you're right. You are like 2 to 3 weeks, behind us, because we're definitely seeing. We actually have one of our clients on here, Claire. We were active right before all of this stuff started happening, and so it pretty much just locked up the market for sellers. Unfortunately, there's still people floating around, but then when they close off the physical showings, I mean, it's just really just knocked it dead. Some interesting facts for you guys. I was just pulling up. So this time from April 1st to April 23rd in 2019, we had about 7,000 homes active. And that same time frame this year, April 1st till present, we have 9,300 homes active. So just put it in perspective, we haven't seen that many active homes in April since April of 2013.
Wow.
Yeah. So
That's telling.
It's telling for sure, and it doesn't necessarily mean that our market's tanking. All it means is that, because everything's frozen right now. So really nobody's moving. So people that went active right before all this, most of them are still active today. So it's just compounding the numbers. So it'll be real interesting to see the direction that all this happens, because just again, what you were saying, Co, we also have other clients who were ready to go active or started looking before all this stuff happened, and they waited. And so there's a lot of people waiting. So it's good news for the sellers and good news for the buyers out there. There's just going to be more people in the market, we think.
Absolutely.
The one thing that you spoke to that's a little bit concerning is the unemployment rate. I was just looking at that. Over the past 4 weeks, there's been 279,199 unemployment claims in Colorado. So that's a lot. And that's obviously going to affect people's lending ability, even folks that were furloughed. And then, they have to wait, whether it's 2 weeks or a month or whatever. And I guess that's probably lender specific on how long they make them wait after being furloughed. But those are the kind of things we're going to see. So it's an interesting time right now.
Well, I want to bring this back to mindset as well. You've got a lot of people that are in the fear zone.
Mm-hmm.
And then there's those that are starting to swing the other way. So, it really kind of depends on mindsets as well as the expectations that all of us as professionals are sharing with our clients.
That's right.
And helping to understand now versus what it did a month ago.
Right.
Because things have changed, but I think employment is going to be a big factor. If that's not an issue, I think we're going to see things start taking off.
I do too.
Yeah,
we've been comparing it to like a rubber band being pulled back, and then as everybody's getting released and able to get back to a little bit of normal, it's just going to take off. So there are going to be some things in the industry, like Mike was talking about, that's going to be maybe a longer term factor. But I still think, even all the people who are just kind of sitting on the sidelines waiting, that's gonna I think it's going to put a big boost in the market.
Yeah.
But
Yeah.
I guess we'll see. We think that the spring was going to be what the spring usually is now going to be the fall.
Yeah, truly.
Agreed.
Julie, I've actually got a couple questions for you because
Yeah.
you're in the home inspection industry, and I know you guys were some of the few groups that were still able to get out, for folks that were already under contract when they shut off all the showings to agents. So what are you seeing kind of happening from your side of the aisle there as far as activity? Was it spiked in the beginning, then slowing down, or has it still been pretty steady?
That's a lot of questions. So what we did see very first of all was an influx of calls. Are you still working? Because I guess a lot of inspectors just dropped. They were like, this has been vacant. We're not going to inspect. And we were like, yep, we're still working. We stayed business as usual. Of course, keeping with masks and gloves and social distancing for your clients and the homes that we were inspecting. But we have stayed busy in this time because homes are still selling and they still need inspections. So we haven't, what we would normally expect at this time, we're not even close to there because nobody is. But we have stayed busy. And I went to see my dad yesterday and said, I really hadn't looked at the calendar because I just didn't figure much was happening. But they are both, I don't do inspections, just to be clear. They are both averaging 2 inspections a day.
Oh, wow.
So yeah, so that's pretty good. And then today I had 4 calls come in. And of course, my kids are at home with school. I long-term substitute position teaching science for my kids' school, and my husband was home. So with trying to have all these people with conversations all around me, it was, today was weird. It was a big influx for inspections, calls that came to me. Generally, people will call direct to the inspector to schedule or schedule online. So for me to get 4 calls, it was kind of shocking and exciting, happy to help all the people along. The calls that came in today was on speakerphone while the buyers were able to finally see the house. Right? Under contract, and then you can go see the house. So that's when they were calling. They're like, can you do an inspection tomorrow, Saturday? But yeah, we sure can. Not a problem. So that's how it's been for us. Not nearly as busy as we would expect in the spring, but not a standstill either. And we are sure to wear the masks and kind of customize to whatever the buyer and the agent want at that time. Some people, it's a vacant house and they don't care. They're like, wear a mask, don't wear a mask, gloves, we don't care. And other people are like, fully masked, fully everything. Okay, do that.
Yeah.
So, the joy of having a family business is that we can customize to what our real estate agents and their buyers need.
Sure. Well, that's good to hear. And we know that, in our profession and on the real estate side, certainly we've had to get very creative if we wanted to try and get under contract during this time. So
no doubt. Yeah.
We certainly understand what people are doing. Does anybody else have any other questions for anyone? Any industry for the other, or anything else they forgot to mention?
We do have, if you all would like to drop your information in the chat box, the spring home maintenance ideas, a list of, I developed those for every season. So if you would like any of our home maintenance, if the title and lender and warranty would like anything about what those common inspection items to give to your sellers or people who are planning to list, I have those. So if you want any of that, drop me your email in the chat box and I will be sure to get that to you.
Great.
Awesome.
Okay.
And we're happy to share that on our Facebook page for you as well.
Oh.
So just make sure you get that to Rachel.
Okay.
And we'll get that up on online for you.
Absolutely. Okay. Thank you.
I think our plan is to do this again in 2 weeks, right?
Yeah, we're going to do it again in 2 weeks.
So I have a sneaky suspicion that in 2 weeks from now, we're all going to be having
different
conversations. So
yeah.
I think for everybody that's watching this live or via the recording when we put it out on Facebook, I would just say if you're a buyer or seller, just stay positive because we're all kind of seeing the same thing. Yes, there are people selling and buying right now, but the majority of people are waiting. So I think, you know, starting next week on Monday, when agents are actually able to get out and show houses, I think everybody in this group here is going to be pleasantly surprised.
Yeah.
So
I would agree with that for
Yeah.
sure. Yep. All right.
So actually, I have a question.
okay, hey, Claire.
Hey, Claire.
Hi. So this is for anybody, but since you guys are seeing so much more inventory at this point in time, and I guess probably less people buying since people don't maybe have jobs or are furloughed or whatever, do you kind of have any expectation for if this is going to be a buyer's market or a seller's market when we come back, or if it's going to be different from what it was before this all happened?
I can go first.
Okay.
Claire's like, oh, dang, I didn't want to hear from Kevin. I always talk to Kevin. No, so it's kind of hard to put things in perspective because of our crazy market the last 4 or 5 years. So traditionally speaking, you know, kind of an average normal market is 15,000 to 18,000 homes on the market at any given time. The fact that we're at 9 now is still far under like a normal, healthy market. Now, you bring up a good point though, where, you know, how does that affect, because buyers might be losing their job or they're furloughed or whatever. That could be the case for, I feel, for some buyers, but I also think there's a lot of people just waiting. There's still a lot of people out there working. You know, a lot of people have good jobs. They haven't lost their jobs. They haven't changed jobs. They're literally just working from home and just waiting. So my take is, I don't think it's going to turn into a buyer's market per se. I don't think it's going to be, you know, 3 years ago seller's market either, but we've been kind of climbing out of that, you know, for the last year or two anyway, as more inventory creeps up. So, you know, I personally, I think it's going to be, you know, I still think we're short of inventory, so it's still good for sellers, but yeah, it's going to be good for buyers as well. Anyone else?
I agree with that, but does anybody else want to jump in?
Yeah.
Yeah, I think I'd jump in on that too. And I would say this, you know, 60 days ago, you know, I'm pre-qualifying all kinds of people, right? They're kind of getting ready to, you know, start hitting that buying season. Had some friends who had a house not far from me, 400-ish. I think it ended up selling for like 410, right? So an affordable house for everybody. Stuck a sign in the yard. They had 99 showings over the weekend.
Wow.
Right? Because everybody, that's an affordable home, and it's in Cherry Creek School District and all those fun things, right? So, as I say, 98 people lost the house lottery, and they still have to move on to the next home, right? So let's just say that 70% of those people lost their job. And just a number, I'm making it up. But 70% of those people lost their job. There's still 30 more people that are looking for the next $400,000 house. So I agree with you guys that there are still plenty of buyers out there. Submitted an offer last night at 10 p.m., talked to the listing agent this morning at 10 a.m., and he had 3 offers, and ours was the 4th. And the house had been on the market for 24 hours, and nobody's able to walk through it yet.
Yeah.
They got 4 offers at $500,000. So I do think that there's still plenty of folks out there. I would say this, I mean, this is where I'd chime in on the lending side. And being pre-approved, having all your docs in, knowing exactly what you can do when you're going and getting in the car to go start looking or looking online, then you can negotiate, you can be ready to buy. And you're now, if you're one of 31, you might be the one, and the other 30 are going down the road.
Yeah.
Yep.
Yeah, that's good advice, Mike.
Yeah.
Yep.
Totally agree.
Kelly, one quick question for you. It's kind of it's a very it's basically just for our knowledge on our side. So for CIC docs, is it taking longer to get those from HOAs due to cut down staffs and whatnot? Are you seeing anything on that end? Should we be extending those deadlines on our side?
Not as of yet.
Okay.
We are not
Okay.
seeing a slowdown.
Okay. Cool.
What about wiring earnest money? Should I make it longer than 3 days? Think it's okay?
I think that's plenty of time.
3 business days. Okay.
Yeah, truly.
You might want to
Awesome.
turn off one of your
Sorry.
you're echoing.
I'm gonna have to jump off.
Okay.
Okay.
Thanks, Maggie.
Thanks,
Thank you
Maggie.
very much.
Thanks.
Look forward to the next one.
Okay.
All right.
All right. Bye.
Mike, I do have a question. We have a client who is going to be getting a jumbo loan. They've already been pre-approved through Chase, and a month ago we had made an offer, but it didn't happen. And so we're going to be going again on Monday to look at one that they think they're going to be making an offer on. What is there any advice that I should give them that based on the, I mean, it's through Chase. I don't know. So I'm not sure if there's anything I should tell them.
Yeah, I mean, jumbo loans still exist. So I mean, if they're just the pricing on them, the interest rates are going to be less attractive than they were.
Okay.
But they're still going to be okay. I just think you're going to see there's going to be less money in that market, and so don't be surprised. This is where liquidity comes in. Don't be surprised if I'm 3 5/8 is a jumbo rate, and all of a sudden it goes to 3 7/8 or 4% because money money just dries up in that market. There's only so much available, and so then the risk-o-meter goes up, the interest rate goes up, and it can potentially affect somebody's qualification. So I would just say, talk with the lender, make sure that, there's a little bit of room. What happens if the interest rate goes up? If they're locked, they're going to be okay. They're going to honor those locks. Chase isn't going out of business, so
Yeah.
they're not going anywhere, but they'll honor those locks.
Okay. Yeah, that I felt good about Chase. I
Yep.
was okay there. I just wasn't sure what they need to be looking for. So, okay.
Yep.
Thank you very much. I appreciate that. All right. Well, before we
That's it.
close out, are there any more questions? Okay. Awesome.
Well, thanks everybody. We
Yeah.
really appreciate all you being on, and thanks for your time. And you'll be able to see this on Facebook and Instagram.
Yeah, we'll tag all
Where
of the industry
Facebook, yeah.
professionals. So thank you again for being on. And yeah, we're in this together, and I think we'll all make it out fine on the other end. It's just just a matter of going with the flow, I think.
Adapt.
Right. All right.
Adaptability is key. This is a speed bump.
Absolutely.
True.
I
That's
agree.
right.
All right. Well, thank
All right, guys.
you.
Thanks
Have
again.
an
We
awesome
appreciate it.
evening, and we will see you again soon.
Thank
Okay.
you.
Thank you so much.
Yeah.
All right.